Guys, many of you may have seen this article that says private home sales up 1% in Q2, bringing half-year growth to 1.8%, says URA. And immediately you'll be thinking, hey, I thought now got terrorists. Hey, I thought got sellers turning real TV. The market should be crashing. Why is the price still going up? And that's why I want to do this video today, because there are multiple comments from different people. In the next 2 days, you'll be expecting a couple of launches. That means you're booking units this weekend and maybe 2 more weekends to come. There'll be like thousands of people buying properties. And that's exactly why I'm doing this video today, because this weekend we are seeing multiple new launches happening at the same time. In fact, there are 3 projects launching concurrently, and just 2 weeks later we will see the launch of Springleaf Residence as well. If you're someone like me, when you're reading news, right, you just want to read the main point, which is the quote-unquote proof. Do me a favor by liking this video, because it's going to help me a great deal and it's absolutely free. Thank you so much. Look at the banana. So how this video is going to be done is, number one, I'll be going through the TLDR version of this article. Next, we'll talk about historically how has the market reacted using facts and figures. Last but not least, I'll share with you what I think you should be doing as a buyer in this season. Before we go into the actual article itself, we actually have this price index, and more often than not, the price index actually tells us stories. So for Q1 2025 versus Q2 2025, the all residential prices actually went up by 1%, which is a decent growth given that the projection of this year's property market is between 2 to 2.5% at the beginning of this. So a 1% increase in one quarter means to say that it's actually performing ahead of expectation, and majority of it came from the landed property prices, which went up by 2.2%, non-landed 0.7%, which is a marginal increase. And in the non-landed properties, right, the core central region was actually very strong, which increased by about 3%. Rest of central region minus 1.1%, and outside central region increased by 1.1%. Here are some key points from this article itself. So prices of residential properties rose 1% in the second quarter of 2025 as sales volume fell for almost 30% quarter on quarter. Property agents said, no deals to close. Latest government data show that the private property index rose faster than the earlier released flash estimate of 0.5% as mentioned earlier on, and slightly higher than the first quarter increase of 0.8%. While overall prices continue to rise during the quarter on much lower volume, performance across different segments shows varied responses to both external and internal factors, revealing a nuanced landscape, said by Cha Siu Chun, JLL's head of residential research. Landed home prices, as mentioned, meanwhile picked up pace and rose 2.2%, faster than 0.4% growth in Q1. So Mark Yip from Hutton said that the number of good class bungalow transactions with an estimated 11 deals valued more than $300 million. $300 million lodged in Q2, significantly more than the 2 caveats filed in the previous quarter. 11 deals, 300 million. 11 deals, 300 million means how much? 11, 300 million. I'm too poor to understand. 300 million. Wow, my iPhone can 11 deals. So one deal is about 27 million. 27 million PSF very high, meh? Actually, 27 million PSF not very high. Right? So if you use a GCB, you average got big or small, divide by, let's say, 15,000 average. PSF is 1,008. So is it really a lot? Around 2/3 of new non-landed private homes excluding EC were sold for under $2.5 million in Q2. So 67% of the units sold in the first 2 weeks of July were also in that price range. Overall sales volume including subsale and resale declined 29.4%, with 5,128 units transacted in Q2 from 7,260 in Q1. New sales volume excluding ECs fell to 1,212 units in Q2 from 3,375 in Q1. So with the drop in new sales, unsold inventory of uncompleted private homes excluding EC rose by 2.1% to total of 18,498 units in Q2. Including completed units, unsold inventory was up 2.1% to 18,653. So this is significantly lower than the last peak of 37,000 units registered in Q1 2019, said Tricia Chong, CBRE Research Head of Southeast Asia. And the current level of unsold inventory translates to more than 2 years of land bank based on 5 years annual average new home sales volume of about 8,600 units from 2020 to 2024. So the next part only says that there are more home buyers going to the resale market, and that's quite obvious why, because some of them are already priced out of the market and they are not able to afford the high PSF pricing for the new launches. And with a long pipeline of new launches slated for the rest of the year, analysts expect sales to come in at a higher end of forecast of 7,000 to 9,000 units for year 2025, and price pitched to rise between 3 to 5% overall. And the rest of the article is basically talking about rental, which you know that I'm not a huge fan of, so I will link it in the description. You can go check it out yourself. So every time we look at the price index, the big question is what actually caused the prices to go up. Personally, I like to deep dive into the transaction region by region to sort them from the highest to the lowest, and that's where the story unfolds, because it's usually the top end transactions, the ones that broke new records, that pull up the median pricing in the region, and the lower price ones, they don't move the needle by much. So when you see a price surge, it's often because a few standout projects or premium units are setting the new pace. Now let's first take a closer look at the CCR region, where the price spike was the strongest in Q2. Right at the top of the chart, the most eye-catching transaction, the most zai buyer is none other than Sculptura Upmall, transacting at a $6,000 per square foot with a total quantum of $20 million. In fact, if you just look at the top 10 transactions, most of them broke the 4,000 PSF mark, with sales prices ranging from $7 million to over $13 million, and most of them are above $10 million, which is 8 digit. So these are the super high-end luxury units that clearly lifted the median pricing for CCR. Just a bit more commentary as we scroll down a little bit further, we still see resale units that Boulevard 19 Nassim and Warwick residences transacting well above $3,500 per square foot. Many of them were large format homes, and the quantum continues to hover in the high single to double digit millions. Even in the 3 to 3,500 PSF range, we saw a strong resale activity from well-known projects like Grange Residences and Four Seasons Park, which likely involve large format units once again, or penthouses as well, because the number of bedroom isn't shown there. So what's the big picture over here? Most of the transactions that lifted the CCR median pricings were actually the large units with high total quantum. These are not typical investor units like you and I looking at $3 to $5 million. They are targeting the ultra high net worth, which have certainly played a big role in pushing the price index higher. Now, whenever I see a dip in the price index for a particular region, like for this case, the RCR, the first thing I do is to trace it back to the previous quarter. And more often than not, the reason becomes very clear. It is usually because the previous quarter had seen new launches transacting at a much higher PSF, and not necessarily launched at that quarter, but sold during that period at premium prices. Then comes the current quarter, the ones that we're looking at right now, Q2 2025, where the bulk of transaction came from new launches or balanced unit priced lower per square foot. So what I'm trying to say is that sometimes it's not because the prices are truly falling, it's more like a shift in the mixture of what's being transacted, and in the most cases, this kind of dip is temporary and is not a sign of a weakening market. So when we look back at Q1 2025, we start to see why the higher benchmark pricing was formed during that period. There were several standout transactions. At Union Square, you had 2-bedroom units at super high floor transacting close to $3,500 per square foot. Mayor Blue also recorded units above $3,000 per square foot, and the subsale market, you saw Canning Hill Pierce, even resale and subsale units were hitting 3,000 plus PSF. At the same time, Ori was being launched in Q1 2025. So overall, it was a very active and high PSF quarter with strong showings from Union Square residences and the Ori, and that momentum was what lifted the RCR price index back then. And when you see a wave of new launches happening within the RCR region and the bulk of the transactions coming from this new project, that naturally pushed up the average PSF of the overall RCR region in Q1 and sets a higher benchmark for the following quarter, which is the current quarter that we are doing a review on. So when you're comparing quarter to quarter, it's important to remember that surge in the high PSF new launch activities can inflate the overall index, and even if the overall market isn't uniformly moving at that pace. So overall, in Q2 2025, the slight dip in RCR can be explained by the type of new launches that happened during that quarter. So unlike Q1, where we had premium launches like the Ori and Canning Hill Pierce transacting above $3,000 per square foot, Q2 saw the launch of One Marina Gardens and Bloomsbury Residences, which entered the market at a more moderate or lower price point. Because these two projects made up large portion of the RCR transaction during the quarter, they naturally pulled the median price down slightly, even though the market demand remained pretty healthy. For the OCR region, we saw a slight increase in pricing in Q2 2025, and this was largely driven by a few key transactions or launches. The standout one was Elta, which was launched in Q1 2025. One of its highest transacted units hit 2,800 PSF for a 35th floor unit, setting a new benchmark pricing for OCR. Then we had Balance unit at Chuan Park transacting around 2,766 PSF, and Beckner House 999-year leasehold property seeing sales transacting at 2,700 PSF range as well. Then some of the notable outliers were Seaside Residences 22nd floor unit 3-bedroom at 1206 transacting above $2,600 per square foot. So if you go and calculate, if you add in harmonization, this unit at 22nd floor is already transacting close to $3,000 per square foot, which is a strong performance for an East Coast OCR project. So over in Tampines, Parktown were moving above 2,500 plus PSF, especially for the higher floor stacks. So all these transactions, whether from new launches, balance unit or high floor resale condos, contributed to the modest upward movement in OCR prices this quarter. So basically, Q2 didn't see as many new launches in the OCR compared to Q1, which had projects like Parktown, Elta, and Lentor Central Residences. However, what is interesting is that even without new launches, the post-launch transaction remained very strong. In fact, many units were transacting at a much higher PSF than what was being achieved during the initial launch phase. This consistent buyer demand, especially for higher floor units and premium stacks, helped to push up the overall average PSF pricing for the OCR area in Q2 2025. So that's all for the historical numbers. Let me know in the comments what you think, and if you got any more questions, feel free to drop that in the message, or if you would like to get my personal consult on what you should be doing as a buyer today, this is my number. Feel free to reach out to me. So coming to what you should be doing as a buyer today, I will fall back to my 3 golden principles. Is number 1, start saving and invest as early as possible, because as we age, the amount of leverage will decrease. Number 2, constantly upsize your asset net worth by upgrading to the next asset class as soon as you can in a safe and stable way to increase your asset net worth. Last but not least, try your best to have at least 18 months, if not 24 months of security funds, if not a 20% buffer of your available capital to tide through difficult times. So if you have been sitting on the fence for a while, watching prices go up, come down, and then climb up again, it might be a time to stop procrastinating and start taking action. For HDB Upgraders, you are probably looking at the OCR region, where the price growth, if you ask me, has been pretty stable. The average PSF right now is about $2,340 per square foot, but there are still opportunities to enter between $2,000 to $2,200 PSF, like the upcoming Springleaf Residence. And when you're watching this, right, by the way, you want to go and see the show, let me know. It gives you a comfortable 5 to 10% safety buffer below the average. For Condo Upgraders, the RCR region presents a good window. There's been some slight dip in prices, but there's more of a sign of market stabilization that witnesses, with upcoming launches expected to launch around the same current resale and balance units. Anything below 2008 could be considered a good entry point for the new launch market. And for the CCR area, this is when you need to do a little bit more homework and be more strategic. Look at the Master Plan 2025 for future transformation, because usually the CCR is what leads the pack. You need major transformation for it to hit a new high. So you have to be convinced whether the CCR will outperform the previous quarter. So if you're unsure, I've done a deep dive video on the CCR and the RCR zone. Go check it out and decide for yourself based on the data and the upcoming developments, because you have to be convinced with the story if you buy, because you need to sleep well for the next 4 years after buying. And if you're turning into the resale market, maybe you are already feeling priced out of the new launches, or you just need more space, or you just don't have confidence that the new launch in 4 years time can actually make money. No right or wrong thinking that way, but here's my word of advice: don't overpay on renovation costs thinking that it will be your forever home, or pay super above valuation because the house is super renovated. Renovation costs are mostly non-recoverable, and by the time you sell, it is common to see a 50% depreciation in the actual value that you have paid. Instead, focus on units that are already in moving condition, and more importantly, aim to buy close to recent transacted prices. And to help you evaluate better, I'll link my PMFX Factor framework below. It's a simple tool to help you assess whether a property fits your long-term goals, especially if you're planning to hold for 5 to 10 year horizon when you're buying a resale property. And if it checks all the boxes, chances you'll be on track to match or even outperform inflation over time. And do be mindful, today if you're buying a resale property, it's unlikely to see the same price growth of new launches. Why? Because if you track back at people who bought a resale property in year 2023 versus today, fast forward 2 years, most of them are still the record holders in terms of PSF for those developments itself. And thanks for watching to the end. Don't forget to like, comment, subscribe, turn on notification bell because we post weekly real estate videos like this. Thanks again, and I'll see you at next week's video. Bye.